If you were to list the most important industries in this world, the semiconductor industry for sure will be up there. Not only is it one of the most important industries right now, it's rapidly growing. It's projected to grow by more than 12% every single year to $1.3 trillion by 2029. But why is it so important? Literally everything we do is run on semiconductors. From your phones, computers, cars, and even military equipment. Essentially everything that has to do with electronics must deal with semiconductors in one way or another. That's what makes this industry so attractive to invest in, because of the high growth potential. So in this video, I'll be discussing 3 semiconductor stocks that I invest in that I would recommend to my viewers. Before we start, please remember to subscribe and turn on notifications for my channel. I upload videos on financial tips and financial comedy in my shorts. So if you want to get some financial tips about finance or get a good laugh, your support via a subscribe is always appreciated. Now that we got that out of the way, let's continue. You can't mention semiconductors without mentioning TSMC or TSM in the New York Stock Exchange. TSMC, or Taiwan Semiconductor Manufacturing Company, might not be the most well-known company for people in North America, but they're literally the 10th most valuable company in the world, beating companies like Walmart, Samsung, and Coca-Cola. I mean, that might surprise you, but the reason for them being that valuable is that they own 60% of the world's semiconductor manufacturing market share. So 60% of the electronics you see around you, probably a piece of it was manufactured by TSMC. Their biggest customers are Apple, AMD, Nvidia. Even TSMC's biggest competitor, Intel, outsources some of its chip manufacturing to TSMC. When your competitors rely on you to operate, you know you got a stranglehold on the industry. With the demand of chip nodes at an all-time high, the company has recorded some fantastic margins. In the first quarter of 2023, TSMC posted a 56.3% gross profit margin, 45.5% operating margin, and a net income margin of 40.7%. Those are fantastic margins, and that's expected to continue in the future. We're talking years down the line. Just look at the stock's history. Very stable growth. That being said, we do have to look at one of the biggest risks in investing in TSMC. That is geopolitical. TSMC is a Taiwanese company that does most of its chip manufacturing in Taiwan. You know, that little island off China? With the geographical politics between Taiwan and China so unstable, if China does decide to invade Taiwan, well, we could be looking at a big hit to the stock price. However, if China does decide to invade Taiwan, the entire global market will be hit hard. So I don't really see this as a risk directly with TSMC as much as I do the entire global market. The next company, AMD. Ever since Lisa Su took over as the CEO of AMD back in 2014, AMD's stock prices has just skyrocketed. And that's no surprise. AMD has been providing some real good quality CPUs, beating out its competition in Intel. It's also gaining a lot of the market share from Intel during this period. In 2020, AMD became the exclusive chip manufacturer for Sony's PlayStation and Microsoft's Xbox. With esports and big data technology gaining traction with no signs of stopping, AMD is looking like a very attractive investment option. What's cool about AMD is that AMD's portfolio has 2 strong business products. There's CPU, which they're currently the leading producer, and GPU, second only to Nvidia. With 2 strong product offerings and a strong fan base, AMD is as strong as ever, and I see them succeeding in the future. So that's why I will invest in AMD. The last stock, Nvidia, the world's biggest GPU maker. One of the only companies as of July 2023 that crossed the 1 trillion market cap. Just like AMD, with the growth of esports and data centers, Nvidia is on track to maintain good, strong growth potential. Nvidia currently trades at over 200 price to earnings ratio, which is usually a good indicator to see if a stock is overpriced. The average S&P 500 company, 25. So on paper, this doesn't look good, but solid tech stocks usually trade at a much higher P/E ratio than 25. For example, Amazon currently sits at over 300. That being said, with the growth of AI, data centers, and esports, Nvidia is in such a prime position, it's hard to just overlook investing in it. Did this video help you out? If so, please remember to subscribe and turn on notifications. I upload financial tips in my long-form content and financial comedy in my shorts.